don't remember what's wrong and what's right. The world is dead, but we stay. 'Cause we are born as living fights. We live to die. We live to die. And we surrounded by the night. We live to die. We are shadows in the neon light. We are shadows in the neon light. Shadows in the neon. We are We are just shadows. It's supposed to be that we die. It doesn't matter if there is no light anymore, no light anymore. 'Cause we are born as living fights. We live to die. We live to die. And we surrounded by the night. We live to die. We are shadows in the neon light. We are shadows in the neon light. Shadows in the neon. We are
What is happening these days? Let me get the other display going. Hopefully that'll show some goodness. Go ahead and keep the changes. It's down to Z hour. We'll share this screen. And it'll be good. Go ahead and do that. Go ahead and do that. Close that out. Scroll down. Get that over here. Like so. Let's get this going. Get our super charts going. Shaboom. Got a new window for this. Got no window for that. Go ahead and move such things around. Alright, well I guess we're looking at these this way then.
Your father knows about saving money. Everything I'm wearing, I've had since boot camp.
And I just saved on my car insurance for driving safe with USAA.
Auto insurance that flexes with you.
Keep the fit.
That's what we're made for.
Points. Really lock in onto where that volume drops off.
Get your time back
Oh,
with
to the
QuickBooks.
teeth. Yeah, really
Automate your
respected that.
invoices and expenses
Didn't respect it on that one though.
and track your
That's
cash
the weird
flow
thing.
with AI-powered insights. Save
But what I
30%
would
of your
expect-
time per month on average with QuickBooks.
It's sort of like
Now.
a bullish continuation to the upside. So again, this is a very classic technical structure that we're seeing taking place right here. So what I'm anticipating is that now the market is heading towards the high of this general range. I do see the market eventually trading to the highest point, which is right there. So that's 3,405. Of course, I did mention daily is ultimate target, but of course, as a day trader, we have to sort of understand the market doesn't just move in one direction continuously. It will move and then it will take breaks and it will move and take breaks. And so my goal is just to take profit at those moments where price could potentially inflect in the opposite direction. So my final target essentially is that high at 3,400. Okay, so that was the trade. So now initially I actually didn't get pinged in because price came down very close. It didn't ping me in and then rallied. And then I actually got a bit frustrated. I was like, come on, man, it's a Monday. I wanted, like, this is a big trade, right? 1 to 6 potential. And I was very confident in how price would run. And then I was so frustrated, I went and jumped into my swimming pool because I'm like, I need to cool down or I'm going to do something stupid. So I just literally took off my clothes, jumped into my swimming pool. And, my girlfriend was a bit walking back. Are you okay? Let us some steam, because I'm just like, price just left me. I can't believe it. So, but eventually, I went out for dinner and then I came back and then my alert went off and I saw that my order has actually been triggered and I was just like, oh, that's interesting. So I'm actually now in this trade. I didn't expect price to swing all the way back to pick me up, but I'm happy it did. I'm not complaining. So from this point onward, I am anticipating sort of for the market to obviously deliver because between where price is and yesterday's high, there's very little that can sort of get in the way of price. Price has already mitigated this high volume area. So as long as price keeps on continuing to the upside, it will very easily trade above this range. It's just a question of, are we going to see that continuation today, or are we going to see price hold its level and then we see the continuation tomorrow? That's the question. So in terms of the New York session, because there will be an opportunity if you are a trader in New York to trade something like this, and that opportunity will take place in a few minutes. So right now, what will potentially happen within the next hour is we could see the market essentially produce a swing high, pull back, and then after pulling back, break above that swing high, creating a bullish order block. Then the new opportunity would be to take the retest of that bullish order block, anticipating a bullish continuation to the upside, and we are going to see that continuation towards sort of yesterday's high, or potentially see that continuation towards yesterday's high, 3,400. So what I'll do is obviously I'll keep an eye on this. I might see an early opportunity on the 5 minutes take place within the next few minutes, but I will keep an eye on this, and I'll let you guys know sort of when I'll be looking to take a trade within this session. So that's it from me on gold. So bullish is the bias from me now, and over the next few hours. Did you guys have any sort of input on this?
Yeah, I mean, that even structurally wise, it looks really clean. That move higher from that low, around 01:30 a.m. Even that looks like a 5-wave structure to the upside. And even before on the 20th there, that looks like a 5-wave structure, 3-wave decline into that bullish order block. And yeah, hopefully that's some sort of a nice push starting right now.
Damn.
But I'm glad it retested that area for you. You didn't have to jump in the pool.
Is it supposed to be that loud?
So
gold has been pretty clean, hasn't it, with structure in recent times?
Yeah, last week it was a bit dirty, but towards the end of last week, the structure started cleaning up a bit. It goes through its phases. Trading something like this was tough. So my most profitable session last week was Friday when I traded this reversal. But I got, for example, on Wednesday, I got stopped out in this sort of chop because the market basically I got in on a long position, then the markets came down, took me out, and it went up again and didn't really do much. So there are times when gold moves like this, it can be quite tough to trade it. But when gold is sort of given what I like to call an AMD model, when it's accumulated, it's given a manipulation in the opposite direction of the accumulation range, and it's given that distribution. The distribution phase of the cycle is usually the most profitable and the smoothest part of the cycle.
Right.
If obviously gold does,
Right.
give that, if there's enough liquidity to price.
About ready for open.
Yeah, looking at price action from Friday, because I was looking at that. So the way I would look at that would be on my time frames is that price broke out and then there was a pullback to the 62. I think it was a 62 level roughly before the rally. And where you describe that sideways chop, that often happens around the 15% mark. So you see that quite a lot, and that looks to be quite classic for that midpoint in the pullback.
Yeah, and even so like this are you referring to this sort of expansive range that took place right here?
Yeah, I'm referring to you were just on the 1 hour, and so I was referring to Friday.
All that previous chop.
Yeah, Friday's price action, just before it came down to the low and then rallied, that midpoint where you see that sideways price action, that choppiness higher up, that I think that was around about the 50% of the fib pullback.
All right.
Wait, this black right there.
Start the
Higher to the
opening
left.
of the orb.
So kind of like, wait, where am I looking? Yeah, kind of that kind of area. So what I often see is that kind of like, it fakes people out, or it faked me out sometimes as well, because you can kind of think,
Why not?
oh, it's going to react from the 50 and then it keeps going further down. But quite often what you see is that sort of sideways choppiness around about the 50.
Oh, I see what you're referring to.
Yeah.
But are you referring to this? So like, so from this low to this high, the market came down, retested, and then it looked like it was rejected and then came down.
Yeah, I think so. I'm looking usually at higher time frames, but just what I've noticed is it just goes sideways when it gets to about the 50 and then drops with the vectors into like your 62 or your 70.
Yeah.
So yeah, it's kind of, it's a good one to be aware of, and to kind of like, if you're trading fib levels, is that when it gets to a 50 and a pullback, is to kind of make sure you're looking at higher time frames, because it can get super choppy. But it's just an observation on my side.
Good stuff. Good morning,
No,
Robert.
of course, because even like I incorporate like equilibrium. So like the 50 point is the equilibrium between like an expansive range, and it's something that I use as confluence. Like I'll give an example, like something like this, right? When the market on Friday, when the market today opened and gave this high, this became that expansive range from this low to this high, and this is why, like for me, like that area of interest was just somewhere really down here. And obviously we've seen the market, it came down to that 0.6, 0.8 and sort of accumulated for a bit before shifting, retested 6.8, and now it looks like it's sort of like rejected and moving back up. So I generally look for, like, when a market is given an expansion, I look for a point of equilibrium, which is sort of that midpoint where the market would retest and then from there reaction. But then I look for confluence, because usually around that midpoint there might be an order block that was unmitigated, or there might be a fair value gap, or there might be a prior high or a prior low. So I always look for some form of price action that marries in with the fib level region. And even better is if, for example, the 800 EMA was sort of like positioned, like if you look at this, right? 800 EMA is positioned where that midpoint is positioned where that order block is. And when all of these things come together, and again, that 800 EMA acts as a dynamic support, it's just like, it just moves. It's just a beautiful price action to trade. So, so yeah, stuff like this I love, absolutely love.
Yeah.
Cool. Robert saying good morning.
But yeah, so
as well.
I will give you guys an update on Bitcoin, but I'm not gonna hog the screen. So I'm gonna hand it to Lara, because I'm sure she has something exciting to share.
Sorry, did you just hand over to me? You cut out then, Walter.
Yeah, Laura, I think he's passing it over to you.
Okay, that's fine. You just cut out there for a moment.
All good.
All right. Let's go then. See.
Yeah, I got a bit of a lag for a second, but I did hand over to you, Lara. So I'll go back to Bitcoin later on.
No worries. That's fine.
Cool.
Yeah, so from day trading to swing and position trading. And looking at, the markets are super hot. There's been a lot of action, and just starting over here with ZXY, as is my like to keep an eye on that. So this is the DXY, and this is super high time frame, but I do just love to look at, because the confluences and all of that kind of thing. So looking at, this is a 3-month candle, and which is about to close in a week. So that will be the end of the 3-monthly bar that we can see down there. And as you can see, it's pulled into this very high time frame 3-month fair value gap. And this is the DXY. And I also have noticed and like to look out for, this is the EMA 20 and the EMA 200. And when we see them cross and price pulls back, because when you're trading order blocks and supply and demand, you quite often are never, you've got to look at order filled price action. But what I've noticed is where they line up with EMA crosses, they are pretty good in terms of high probability. So seeing DXY pull back to this area, which is a high time frame area of liquidity, and it also lines up with this crossover here. And then if we drop down, and if I put my drawings back on, you can see it also lines up here with this weekly demand area. So again, really nice kind of in terms of confluence, and I think probably recently what we've been waiting to see. So that's on the weekly time frame. So dollar has reacted there. We have the initial drop down. Left behind this liquidity, this is an historic line there, which is high range, high liquidity. We dropped down with these 2-vector daily candles, took that out, and then there was a rally up last week. And you can see that's kind of, for now, classic bullish price action. So leaving behind fair value gaps on the daily chart. So let's see if it holds, but I think from now, positioning on the higher time frames, position trades and swing trades, looking for dollar buys. So looking at, let's go straight down here.
All right, just from the open.
Finally seen some kind of action on the pound, which I know a lot of people have been waiting for. So again, just to reiterate, this is a 3-monthly supply area, and we saw price pushing up into that area. And if you look at this price action, you've got your nice sort of three pushes, 1, 2, 3 up to the high, and then we've seen, and also kind of lines up with this weekly order block over here. And then last week closed with just took out, let me show you on here, just took out the low of that candle from week commencing 9th June. So we took it out with a wick, but the body closed just below that candle there. And then what we've seen is a push back up into the fair value gap that was left behind. So let's see how it develops, but looking like hopefully, it depends how you look at it, but looking like we could see some bearish price action now on GBP. And also on euro dollar, that was also in a very key area. This is the 3-month again. We got a 3-month supply zone here, and we've been pushing up for a very long time up to these levels. We got a reaction of this higher time frame monthly volume imbalance. 7 days to the end of the month, and we're looking like we might end up with some sort of evening star formation candle there. So we can see straight away we got the doji there, inside bar for last week, which is always a nice kind of indicator that if you see an inside bar, an area that's your point of interest, if you look for that, then you could possibly think that that's price compressing, ready for kind of bigger action in the following week. Fair value gap
interesting
got run.
If I look at this,
and then we got the rally back up to the liquidity area.
There was
up there.
this buy volume only happened
so
here.
looking for
that makes sense. You see how much
on Eurodollar as well.
Sales happen.
So
and how much
if
buying
anybody's
happened right
trading,
here, volume
position
that
trading, you
didn't,
could probably, you know, it depends what kind of time frame you're
basically
looking
there's
to
no
trade.
resistance.
But obviously, the very obvious
Seems
one
like
is to
there's
kind
some
of go there and
resistance
just
here
hold.
for
If
the
you believe
fact
that's
that
the
now
end of the
we got
pullback, that's a
about the
position
same amount
trade
of buy
for
volume that there was sell
foreseeable.
volume when it did start.
Or you
coming
could
down.
think, right,
There's
okay, well,
something
it's
I'm
run that fair
noticing
value
right
gap. You
now.
could get in somewhere down here and put your stop above that wick up there. If you're looking to kind of take things even tighter, you're going to want to get some sort of retest of a level. And I like to look at these. And when I look at levels to get retested, these are last month's high and low, last week's high and low. So you might look for daily high and lows, monthly opening price. Just actually did want to show you that back on pound dollar, that what it actually did, price this morning retested the June open price, because I always mark out the price of the open of the month. So that would be another area that I would look for price to retest before getting in on a higher time frame trade. But you've got really reactive levels that if you are looking for, if you trade the higher time frames but you're looking to get in a little bit tighter, certainly on a Monday you've got Black Friday closing price, where I believe that's where they start the auction for the week, so you've got that level there. Last week's closing price, the day before closing price, which would only be different throughout the week obviously, and then other key levels such as the June open. It also happens to sort of line up with
things that I'm thinking about right now.
the high and low week levels from the previous week. So those are all really nice confluences. So those are just some other ways that you might look to kind of get involved with the markets if you're trading high time frames, but you want to kind of get in a little bit tighter. Moving on to
session scripts that I thought would be better to build
so I'm going to turn those off now because that's a little bit to look at. So on Aussie CAD, we had this bounce. I mean, we're in a forever downtrend.
Now we're starting to see some sell side volume.
This huge candle wick over here, for me, that doesn't feel like that's
that would probably be more
mitigated enough when we look at candle wicks and we treat them in a similar way to fair value gaps, and so we're looking for those to be mitigated to at least 50%. Obviously that's a very high
what's the ratio difference between
time
the buy
frame,
and sell volume?
but what we did see was that
Based
price
off of, like, the
took some
red candles,
liquidity
so it's not
here
really, like,
and then rallied up. So
true, but
we still think that this is all kind of fair game all the way down here and hasn't been dealt with properly. So we saw a rally from this higher time frame liquidity, which began in April, and it's pushed up in quite a classic pullback up to a daily area of supply and a fair value gap. And now it looks like we're finally starting to see some bearish price action, presumably to come back down, take out some of these lows, and deal with
and then we could probably
what
put
is hiding
in there, what's
in
the
this higher
ratio
time
of price
wick
action
over
and
here,
the
which I
amount
showed
of
you
volume.
So back to bearish on Aussie CAD.
If the price doesn't move in a lot of volume, that means it's just kind of like a wash.
Yeah, Aussie yen, again, with 1 week left of this 3 monthly candle, we're looking like we're putting in a Morningstar candle reacting off this 3 monthly fair value gap. Also took out liquidity, which on that candle there, which we love to see. And then ever since then, so we've been getting some bullish price action on the monthly, we can see. So with this one, there's quite a bit residing up here. In my opinion, I'm still bullish on Aussie yen. You can see that there's volume imbalances up here that haven't been mitigated. There's a really nice daily demand zone up here. So what we have seen here is that prices, this fair value gap on the daily has been respected over the last few weeks, and you see how these two EMAs are coming closer together. Usually when they squeeze close together, one of one way that you can look to get in is in the breakout of the EMA, so the EMA squeeze. If you're looking to trade the daily time frame, what you can wait to do is for price to get really compressed between these two EMAs, and once again that's the 20 and the 200, and then wait for a daily, because this is the daily chart, wait for a daily breakout of one of those EMAs. In this case, the top one, because we're looking to go bullish, and then you can, target a 2R or something like that with your stop at the low point of what is going to end up being a triangle and will end up being a cross. Now the cross does often get retested, but on the daily time frame, that's going to be quite a while. So you can probably get in on the breakout of this and then target some of these up here. So Australian
order filled.
In my opinion, we are bullish on that one. What are we looking at Aussie New Zealand? Yeah, so what we saw last week, the reason that I put this one on the watch list is that we had as you can see on this price action here, that it came down, price came down here in April, back to this higher time frame or weekly demand area, reacted really nicely. Then we got a huge rally up at the end of April, reaction off the EMA and the weekly fair value gap back down to the fair value gap that was created in the bullish direction, and then ever since then it's been pushing up. So once again,
Stop
looking
filled.
for
Stop
bullish continuations on Australia, New Zealand. See these wicks, all wicks to the downside. It does put in quite a lot of wicks in the Asian session, and they can be quite brutal actually. Yeah, I mean, I was in a position. Yeah, I was in a position last week, and the wicks. You can see it took me out by the wick. But it's just it's a feature of one of those things. So it's like trading the higher time frame. So it's quite nice going a little bit higher. But again, there's different ways you can look to get in. You can look to get in on a squeeze breakout. So this is an 8 hour. So just keeping an eye on price action here. If you get an 8, depending on what time frame you want to look at, but for me they're always higher. But you go and wait for price to break out of the EMA compression. So that's Australia, New Zealand, pound, New Zealand. As we can see, that has really gone crazy today. There's quite a few of them that have really broken out today, quite aggressively. So that's taken off. And if you're interested in getting involved in that one, then you're going to need to wait for a retest of some description here. There's a little fair value gap that we can see there. That's a very high one though. That's just been high time frame one that's been created. You can look to wait for price to retest any key levels or another like a 4 hour fair value gap. Just watch out for price. I mean, if it breaks out of Friday's level on a Monday, then you can probably think about trying to get in on a Tuesday and sometimes a Wednesday. That's when it tends to put in the pullback after an aggressive breakout, and then you can look to get in and position yourself on the Tuesday or the Wednesday. Well, I think JPY was looking rather similar as well. Had a huge price action in the last this one took off. I missed the breakout this one because it took off in Asia. So just looking, so I've had to sit this one out, but looking for how you might be able to get in. I mean, there's a cross down there.
Order filled.
Order filled.
Order block just here. So we're just going to have to see how far price goes on the higher time frames, and then look for a pullback again to a key level or some sort of higher time frame fair value gap. So CAD yen bullish. See what happens in the next day. Again, see if we can get a pullback over Tuesday and Wednesday to position ourselves to get in. New Zealand, wow, I mean, they just literally have tanked. You could have looked to have got in here on Friday, and we saw all this bearish price action from this kind of these key levels up here. We saw this consolidation, and then finally price broke down. And then there was a rally.
Kiwi dollar, that's pretty, wow, strong decline.
Yeah, it's just gone crazy in terms of.
Do you know if there's is there a fundamental reason for that? Do you think?
I don't know of one. I haven't. I mean, unless it's just dollar strength, I don't know of any kind of fundamental, New Zealand against the New Zealand dollar. I mean, we are seeing some serious rallies on the dollar. I mean, like dollar yen did the same kind of thing, just went absolutely crazy and just straight out of the gates in the Asia session. So whether that's just dollar strength and they've kind of just got at a key level, I don't really know. But like this happened on Thursday, then it pulled back up into this lovely area of liquidity and also a cross, one of the things that I love to see. So you could have got in, it lined up with an inflection. But if you missed that on Friday, not everyone likes to get into long-term positions on a Friday, especially at the moment, then that would have been a great trade if you hit it, but it's gapped down and it's just now it's looking like it's starting to do a pullback. So look at what your levels are, where it's going to kind of pull back to. There's a little
stop fill
area up here, so we'll see how far it pulls back, but you can measure that with your fibs now that you've got your originator point of the move and the end of the pullback. So if you trade like OTE or your fib levels, just keep an eye out for that. But what's really nice is when those line up with obviously all blocks and then other kind of key levels that we like to keep an eye on. This is the low of last week. That's last week's low level there, and it's kind of, so there's a cluster of kind of key levels there. So if we can get price to come all the way back up there, that would be a great area to get involved. And then dollar yen's just moving so fast right now. Again, broke out in the Asia session, so you wouldn't want to be chasing that. So you will see where you can get involved, see how far this pulls back to, and then be looking, for me, because I trade the higher time frames, I'll be looking for it to pull back to one of these levels here. Probably not going to come all the way down there because there's supply area there, and then wait for an engulfing candle on the 1 hour as confirmation. But I like to look for the 3 pushes in the pullback and see if we can get involved there as well. But I guess I always feel a little bit worried when price moves that fast. But I mean, it has, when it's looking for its target, it can go that fast because those are the vector style candles that get put in. So just got to keep an eye on it. But obviously there's all this kind of liquidity up here that causes significant reaction. So so that's dollar yen. But I mean, overall on dollar yen, I am bullish because of this. Let's turn this off. Sorry, everybody, not that one. Doesn't matter. Because it kind of has reacted from this significant level of institutional demand down here. So when we've had multiple reactions from a similar location, then that's, for me, if price continues to react to that means I'm bullish on that. And I've got some gaps that have been created on high time frames, so that gives me extra confidence. So it's just about trying to time where to get in, really, on those.
Do you think it's gonna? Do you think there's a chance of it maybe coming back down where it's sort of like left those equal lows, and obviously major pull of sell side below those lows.
These ones here.
Yeah. So
Yeah, there are some equal lows there, and I would have preferred that to have been taken out. You're absolutely right with that. But in the meantime, we haven't seen enough, I don't think, of a push up to warrant a push down yet, if that makes sense.
Right.
So it could well come up here, but I'd be looking for that one to go and some of these kind of levels to kind of get taken out and to create a stronger reaction. There is a let's have a look here. There's an area here, isn't there? So it could do, of course it could do. But right now it doesn't feel like that is enough of a, that doesn't feel like enough of a pattern. For me, I would want to see higher levels up here for this high here to get taken out before it came down. Who knows? We'll see. But yeah, I'm 100% with you, and I have that marked out there. I would have much preferred to have seen that level get taken up before the rally. But you know, it did put in
65% versus sell
on the weekly time frame significant bullish price action. So and it dropped and then it's gone up again. So I don't know. We just gotta trade what we see, don't we? So
which I think I am.
Now, always.
Yeah.
But yeah.
Always.
The best you can do.
Yeah. That's all you can do. It's just kind of like probabilities, isn't it, in the end? So yeah, it would have been nicer to have seen a bit of a deeper leg in here.
Order filled.
We'll take this
pattern here for the reversal, but well, right now, you know, it's looking bullish, and
I mean,
you know, if we get confirmation.
What you're looking at is like a long-term picture, right? So there's every likelihood price could take out those highs, and then in the long run come back down and take out the lows at some point in the future, right? You know, so.
Yeah, absolutely right. And I think let's just put this back on a minute. You know, we've got there is an order block up here, and price reacted from that fair value gap of that order block, and yet we've kind of come straight back up again. So for me, that's like, okay, yes, it could come back up, take that high out and drop. I don't know, it just doesn't feel like this price action here doesn't feel like it's ready to drop. So, you know, it could be that we've got to wait for price to come higher before it drops, or it may just not. You know, sometimes it doesn't. So you're waiting for the equal lows to get taken out, and it doesn't reach them, or you're waiting for a higher time frame area of like a wick, which holds all the liquidity to get spiked into, and it doesn't happen, and yet price still keeps on going. So yeah, you just kind of on the higher time frames, you're getting quite good confluence when price is breaking structure to the upside on higher time frames, and you just got to go with it while it is going in your direction. That's because it's safer. You got bigger stop losses, you have more time to react and think and sort of think about whether that's a position you want to stay in. I mean, I would expect there to be some sort of a reaction here, because if we turn that off, we can see there's this order block. So it makes sense that it's started to pull back from there. What it does next, we don't know. It depends how it reacts to some of these levels. But if you look at these EMAs, they're about to cross. So that's a bullish confluence. So we'll keep an eye on it.
Back down to...
Awesome. By the way, I know, Richard, you're raring to go. I'm just about to take a trade on Bitcoin.
Yeah, please do.
It's just one of those opportunities.
No, please go ahead, Walter.
Love to watch that.
This will be a quick one, right? And then I can give a much more. By the way, check out gold. It's just it's just running for those highs right now. But like I said, there's very little resistance. Like once it breaks, it will just run.
Yeah.
But with Bitcoin, so I'm about to go long on this. And just, I know quite a few people are like, oh, but Bitcoin's been falling, and it went down to 100K, and that was always a possibility. I talked about this a few weeks ago. It's like after price basically took out this daily imbalance into a value gap, right? It's like price is going to run for sell side, and the initial target was this low, right? The low of 102, and if price were to break below 102, the secondary target was 100.2. And of course, price broke below 102,775, traded down to 100,332. So now, very much so, the sell side target has been taken out. But if you look at the bigger picture as well, like what is Bitcoin doing? it's
Will we
it's
come down to
accumulating,
the middle,
right?
or will
It's very much the same as gold. It does the same thing, right? It's trending, but it spends most of its time in an accumulatory range.
Yeah.
So it's taking out the high, come down, taking out the low, and I do see a very strong possibility Bitcoin could potentially rally to the next draw on daily buy side, which in this case, the next one daily buy side is going to be this high that was created last week. So this last week Friday. So this is 106. So that's now my next target for the upside. So that's just the longer term picture. So what happened today was very interesting because we saw Bitcoin basically trade, so I've gone onto the 1 hour time frame. After Bitcoin took out that sell side liquidity pool, we saw a bullish break of structure to the upside, very clear break, right? Price gave that initial leg, secondary leg, right? We have a very clear area of interest being this most recent bullish order block that was created. We can see the market has pulled back right into that order block, traded into key levels. And then if we then go on to the 15-minute time frame, I'm just looking for exactly that same structure where the market came down, broke structure to the upside, the 15-minute time frame. So at this point, the move is a no-brainer. What I'm anticipating is a retest of this recent block that was created on the 15th. And from there, I'm anticipating a continuation. So essentially, like, this is the order I'm just going to place right now. So it's gonna, I'll do this live on the trading account, but it's basically going to be a long position from the bullish order block. Stop was below the low. And then I'm not going to be targeting, of course, the daily high, because there are going to be other highs that Bitcoin could take out before getting there. So for me, the next obvious area, so the next reasonable high that we could see Bitcoin trade into, there's two ways to identify this. One is, of course, we can see the market came up, created this really extended wick before pulling away. So there's a nice liquidity pool of this high. So this could form a primary objective for profit taking. And then, of course, we have unmitigated. So when the market basically gave this break to the downside, right, it left an unmitigated order block right there, right? So again, if the market were to break above this high and trade above this high, it will most likely trade into that unmitigated order block, which sits above the 30-minute EMA. And that's just sitting right below the daily. So what I want to see, though, I do want to see how the market, so I'm going to aim for that further target. At maximum, I would aim for this prior high that basically coincided with where that 800 EMA is on the 30 minutes. That will be my final target for this particular move, right? Because I don't see this move trading immediately into the daily. Price could trade into the 800, bounce back, accumulate, and then we could see another opportunity to take another trade towards that daily buy side. So for me, that's just the best way to sort of to trade around something like this. So in terms of risk reward, right, to that 800 EMA, to this prior high right there, right, we're looking at around a 1-3, which isn't bad. So I'm just gonna drag over this.
We didn't really have a target for that, so we just went ahead, went with that.
So a long position from the order block, stop goes below the low, target will be, so again, just to zoom out of this a bit.
So on these ones over
this
here,
prior high right there.
Go ahead and wait it
right,
out.
so we're looking at a 1-3 risk to reward.
See what we're doing.
So I'm just going to
here
place
now.
a pending order. I always use pending orders.
So you always put your order on the actual edge of your order block that you've drawn. I'm noticing that you're putting
what the market is
your
doing.
order block with 2 candles. A lot of people draw them with the last down candle.
Random name person, we do not care about.
Always.
Nice, Walter.
So you were saying?
No, I just noticed how you draw your order block
I'm
with
super
Lara.
tired, guys. I don't want to chill in here.
I think there's a bit of a lag, Walter.
Seems like we're hitting
Voice lag.
the zone of resistance.
Sorry, Lara, go on. I can hear you.
Resistance.
No, it's fine. I know we talked a few weeks ago. You were going to talk about how you draw your order blocks, but I just noticed that you draw your order blocks with the last down, the 2 last down candles, or the run of last down candles before a bullish breaker structure. where some people are taught to draw it with the last down candle only. So I was just interested in that. What your thoughts are about that?
Yeah. So the two ways, right? One school of thought is the order block is the last down close candle, which is this.
Yeah.
And then another school of thought is the order block. So all of this 1, 2, 3, 4 candle is basically one move, right? So rather than look at it as separate candles and separate moves, all of it is one liquidity move. So for me, it's quite arbitrary to just say, hey, the last down close is the order block because that represents a section bigger move. And so for me, it makes more sense to go for the wider range where the move actually started to the downside, and that's more representative of the order block. But what I focus on is, rather than, because there's two types, right? You have the order block, which is this one right there, and then you have the one that comes to the right, which is this one right here. So the one that comes after the shift is taking place. So I tend to focus on the block that was created after the shift has taken place.
I don't even know what
And
this
that for
is.
me
What
is like
this
the
thing?
like, for example, like this low is what I would call an unmitigated zone, because normally if it were to be a balanced market, after the market breaks away from this high, it will potentially come back down to retest. So like if we look at gold, yes, like my pending order was at the order block, and yes, it did get trigger. But that's usually an indication of one of two things. Number one, it's an indication that the market will most likely come back down at some point in the near future or the distant future to rebalance at that level. Hence why whenever there's an unmitigated zone, I always mark it down, because that zone forms a point of interest where, for example, like in this case, a full bullish cycle into this previously unmitigated was the catalyst for this reversal back to the downside into the unmitigated zone where I was looking to go long.
Seems like it's running into
So this is why I always leave it marked out. So order blocks, most of the time, will be retested. A retested order block is a sign of a balanced market, and an unretested order block is a sign of an imbalanced market. And the market would always seek to rebalance itself.
Yeah.
Not.
So if you're marking out the whole of the last run down before a bullish move, that would also take in any fair value gaps that other people are seeing if they're only marking the last candle down. If that makes sense, doesn't it? So that's how often it doesn't
because if it's just the last candle, it doesn't reach it sometimes. Because I used to do that. I used to just go for the last down close candle. But what I found was a lot of my orders didn't trigger because quite a lot of the time the market wouldn't retest. It would retest the range, but it wouldn't necessarily retest the last down close candle. Hence why I realized the order block isn't just the last down close. It has to be the range, because that's what's retested the majority of the time.
Yeah. Very good.
Awesome.
Pretty happy with our trade.
Nice, Walter. Hopefully you get pulled there.
I think I need a.
Right,
No, I'm not in yet. That's
no, I said
when
hopefully
that's
you
gonna get filled.
All right.
Looks like
I'll
it
kick
is
things
going
off here
to
with crude oil.
32. Probably would have done.
Let's just share that.
I'm excited to see how crude is doing.
Yeah, I mean, we've had a gap open, and with this to kick off the week, obviously trading resumes Sunday. So firstly, just looking at the daily time frame, I've had an upward sloping Andrews pitchfork from this low on the 9th to this high on the 23rd of April to this high low on the 5th of May. And you can see that price has been respecting the center-median line quite a few times. It struggled to actually break through it. It wicked above that center-median line quite a few times. Then if you look at this candle, which is today's candle, we had one heck of a gap up to the upside. Let me just zoom out. You'll probably see it better on the 15 minutes. You know, at Sunday's open. And we retrace all of that all the way down to the downside again. Hold that gap. Now I just want to quickly jump back here on my 4-hour time frame. If you keep those same angles, this is why I really enjoy using market geometry sometimes. If you keep those same angles that I used on the daily to draw that pitchfork, you run a line parallel to
like it might be ready to come down a little bit.
One of these median lines, we had this little lower high here and today's high, which found resistance at that level again. And now we've seen a move downwards. You got to be careful when you switch between time frames. You get sometimes drawing displacement between, let's say, 4 hour and a daily if using market geometry. You see this green zone over here with this strong decline we're currently seeing. If price were to respect these angles again, it might be coming towards this. You can't really see that very nice clearly now. This 50% dashed median line over there, which if price moves a little bit lower, lies around about 72,
Anyways, I
20,
think,
72
keep my eyes open,
sort of
guys.
area.
I think that's it.
So I'll be interested in potentially taking a long here if crude oil can
Right
actually
there. We're just gonna
pull into
continue
that
on.
zone,
We got I'll watch two
which
other
is not far
followers
off.
who are also believers. So
Assuming that we might be seeing in the bigger picture some sort of a corrective move lower. That being said, things have been pretty wild, as you obviously know, with this war
help us out.
that's going on. So it's been extremely volatile.